Hey, what's the deal? This is your brother Cabrin Mills, the rapping real estate investor, back at you one more time with a quick video, dropping the gems and the nuggets and the knowledge and all that good stuff. And as always, just making a statement, letting them know why they call me the rapping real estate investor, man. And just to get it started off right, we're gonna do it like this. I'm magnificent. A magnet to money is kind of omnipotent. How I get to it is ridiculous. If they watching me, I'm sticking to the script. They are ridiculous if they think that they can phase the game. I'm in a different phase, a different lane, a different way. My brain is on a different planet. Planetary galaxies, they wouldn't understand it. I'm out of space, they wouldn't land it. They couldn't handle it. If I was in their hand, they drop it, they fumble it, man. I'm just too hot, man. Playing hot potato, I came up off of the block, man. Couldn't never stop, man. I'm going straight to the top, man. Yeah, I got the knowledge of about like top 10 men in the world. I don't know. You not him, stop them. All right, man, I'm just playing. I ain't here to rap for you. I'm just here to rap with you, man, about investing, especially in real estate. And today, we're gonna do some quick fundamental investments. Again, we're talking about real estate, but what you will learn after you do some investing, do some studying on investing, is that a lot of times they all really correlate. And the principles that you would find that when Warren Buffett analyzes what stocks he gonna buy, if you kind of use those same principles to buy, say, a commercial real estate building or something like that, really it's a lot of times the same. For one, like I mentioned, real estate, commercial real estate anyways, because you're buying a business essentially. If you were buying an apartment building, if you're buying a real retail space or anything like that, there's certain fundamentals that show if the investment would be performing properly now, and what's the potential that property would or investment would perform in the long run. Same way you analyze a stock, a lot of times is how you analyze a real estate investment. So, but I'm not gonna get too caught up in the woods there. What I will say is though, just some fundamental investment advice. If you are gonna buy something, and we're just for the average person, you're not gonna go buy a commercial real estate property out the gate. So let's just look at it as a single family home that you are looking to rent out or flip. I will say this, we can argue about it. If you are flipping a property, it's not investing. Investing, in my opinion, is in the long term. Just like I don't think stock trading is investing either. I do think those are great ways to be able to leverage your time for greater risk for a smaller time. But I define investing as making your money work for you when you're not having to do anything. And when it comes to stock trading, when it comes to flipping houses, wholesaling, stuff like that, you got to do work. It requires you to be involved in it unless you build it into a business, and that's a job in itself. So either way, I won't get too deep into that either, but we're going to say we're talking about for the long term when we're talking about investing. So you're buying a rental property, and you want to know how much you should pay for it. We're just going to go with, and historically it's been 80%. 80%, honestly, depending on your market, is a good cushion. I would say anytime you are in a area that has good school districts, it's got growth and things like that. If you are all in on this investment at 80% of what it's worth, so let's say it's $100,000 investment. If you are all in at $80,000, you should be good, especially in the long term, as long as the rent will cover the expenses. If you have a mortgage on the property, cover the mortgage and the expenses. And usually you should try to be able to, at bare minimum, and this I still wouldn't recommend necessarily breaking even. I would try to have some level of cash flow. That's where financial freedom comes from. And I would say at least $100 a door would be a good goal. But buy the investment at 80%, run the numbers, see how much it's going to cost for your mortgage, see how much it's going to cost for taxes, how much it's going to cost for insurance, how much you need to keep on, just on the side for if something goes wrong, a furnace goes out, you need to replace the roof. If tenant damages your property, have some money on the side for that. There's going to be a certain amount of time in the year that it may be vacant. If a tenant moves out, you may have to go in, paint some walls, change some carpet, and then find a new tenant. It may take a month month or so. You need to calculate that amount of time. Like, okay, a certain amount of time the property is going to be vacant. Add all that up, and at the end of the day, you want your investment to be able to pay for all of that stuff, and then also have a little money on top of that. And you also want to have a certain amount of equity. That's the amount of value you actually have in the property. So at the end of the day, that's where that 20% comes in. I usually shoot for 30. So if for me to be all in on investment, it would be 70,000 on that $100,000 house. That's how much I buy it for, how much I fix it up for, and all the costs that go into acquiring that property and getting it ready to rent out. I try to stay under 70%. But depending on the area, depending on the market, a lot, especially with the way it is right now, the market's crazy. It's a lot of competition out there. So you may have to, just take what you can get. If you want to be in a strong market, you may have to go up to 80. I know some people that go up to 90, depending on where you are in your investing career and financially. And again, if the area is appreciating, we'll get into that in another video. I don't suggest that you bet on appreciation, because you never know. It's kind of like gambling. But at the same time, where you want to make sure is you have a certain level of cushion. And I always recommend at minimum 20% of whatever that asset is worth. If you're buying a property worth $100,000, don't spend more than $80,000 on the purchase, and however much it costs to get it ready for you to rent or sell it, if that's what your ultimate goal is. And again, I'm sorry, I know this is probably, if you don't know anything about investing at all, this may be kind of confusing, some of the stuff that I'm throwing at you. But as we make more videos, we'll dive more in depth into certain principles, certain terms, concepts, and stuff like that, so that you will be more acquainted with what I'm talking about, and we can just grow together like that. But that's pretty much all I got. Yeah, that's pretty much it. So till next time, exercise your body, exercise your mind, exercise your spirit, exercise your grind. I'm out.